Hey there, and welcome! Ever stop and think about what really powers our economy? Beyond the headlines and the big stories, it all comes down to money and the huge financial system that moves it around. In this explainer, we're going to break down the fundamentals, from something as simple as paying for a coffee to how massive skyscrapers get built. Let's dive right in. All right, so first up, we're going to demystify what money actually is and why we even have it. Then we'll get to know the major players, the big institutions that manage all our finances. From there, we'll look at the role of the central bank, kind of like the referee of the whole system. And finally, we'll tie it all together and see why this stuff actually matters to you and me. All right, let's kick things off with a really basic question. Why do we even need money in the first place? Well, before we had cash and cards, there was a system that sounded simple, but in reality, it was a total nightmare. Yeah, you can probably guess how that would go, right? It just doesn't work. See, in a world without money, you're stuck in a system of bartering, of direct trade. And believe me, the logistics get completely out of hand fast. And this is the absolute core of the problem. Just picture this. You're a baker, and you need a new pair of shoes. Well, you'd have to track down a shoemaker who, at that exact moment, is craving bread. What are the chances? It's a logistical nightmare. And that's exactly where money steps in as this brilliant solution. Now, the two most important words there are generally accepted. And for us here in the UK, that's not just the notes and coins in your pocket. It's also all that digital money sitting in your bank account. You can think of money as like the universal translator for value. And this is super interesting because it shows you that not just anything can work as money. It's got to be accepted by pretty much everyone. It has to be divisible, into pounds and pence. It needs to be durable, so it doesn't just fall apart. It's got to be portable, easy to carry around. And, this one's huge, it has to be really, really hard to counterfeit. But money does more than just let us buy stuff. It actually plays three other super important roles. It lets us store value, save up for the future. It gives us a common yardstick to measure value, so we can compare the price of a car to the price of a house. And it lets us defer payments, which is what makes things like loans and mortgages even possible. Okay, so we've established money is this incredibly powerful tool. But who's in charge of it all? Who manages it? Well, let's dive into our next section and meet the key players in the financial world. I love this analogy. It's a perfect way to picture it. The financial sector is basically the economy's circulatory system. All those banks, building societies, and insurance companies, they're the veins and arteries, and they're pumping money, the lifeblood, to wherever it needs to go. Right at the heart of this system, you've got the commercial banks, the ones we all use every day. And what they do, at its core, is actually pretty simple. They're basically financial matchmakers. They take deposits from people with extra cash, we'll call them savers, and they lend that money out to people who need it, the borrowers. So how do they make money? This slide lays it out perfectly. They'll pay you, the saver, a certain amount of interest on your deposits, let's say 2%. But when they lend that money out to a borrower, they'll charge a higher interest rate, maybe 6%. That gap in the middle, that's called the interest rate spread, and that's the bank's profit. Okay, but what about building societies? You've definitely heard of them. They do a lot of the same stuff as banks, savings accounts, mortgages, but the whole idea behind them is completely different. And here it is, the big difference. Commercial banks are businesses. They're owned by shareholders, and their number one goal is to make a profit. Simple as that. Building societies, though, they're owned by their customers, who are called members. So their main goal isn't profit, it's to give the best possible deal to their members. That can often mean you get better rates. Another massive player on the field is the insurance industry. Now, their whole game isn't about saving or lending, it's about giving us all a financial safety net for when, life happens. You can basically break insurance down into two main types. First, you've got life insurance. That's there to provide financial support for your family if you pass away. Then there's general insurance, which is pretty much for everything else. It protects your stuff, like your house, your car, even your health from the financial hit of something unexpected happening. So, okay, we've got all these banks and insurance companies moving mountains of money around. But what stops it from becoming the Wild West? A total free-for-all. Well, that brings us to the big boss, the central bank. And that really is the million-dollar question, isn't it? Who's the referee in this giant economic game? Who makes sure the system is stable and that we can all trust the money we're using? Well, here in the UK, that job falls to the Bank of England. It sits right at the center of our entire financial system, and its one main goal is to keep everything running smoothly and stably. So, what does the Bank of England actually do? Well, it has four main jobs. First, it's the only place in England and Wales that can actually issue banknotes. Second, it controls something called monetary policy. That basically means setting the main interest rate to keep inflation under control. Third, it acts as the bank for banks, kind of like a lender of last resort if a commercial bank gets into trouble. And finally, it manages the UK's official stash of gold and foreign currency. Okay, so we've met the players and we've met the ref. Let's bring it all home now and talk about the big picture. Why should any of this complex financial stuff matter to us in our daily lives? Well, it matters a lot. A strong, healthy financial sector does three absolutely critical things for the economy. First, it provides credit. That's the fuel for everything from buying a car to a business expanding. Second, it provides liquidity, which is just a fancy way of saying you can get to your cash easily when you need it. And third, it helps us all manage risk, spreading it out so we can have the stability to invest and grow. And you can see the results of this all around you. It's what lets people get mortgages for their homes. It's how entrepreneurs get loans to launch that next big idea. It's even how the government finances huge projects like new hospitals and roads. It really is the engine that drives our entire modern economy. So this system moves trillions of pounds and literally shapes the world we live in. But all that power, it comes with enormous risk. Which leaves us with one last really big question to think about. What keeps this whole powerful engine from spinning out of control, and how do we make sure it works fairly for everyone?